Okay, so I appreciate you guys jumping on the call tonight. A wild day in the market. So today is June 5th, or Wednesday night. And so the topic is going to be trading options on futures. And then, we'll talk about lots of different choices and trading options. And I wanted to share with one of my, I call it my go-to ES trade. I've been doing it as a campaign, and I'll explain kind of what that is as we go forward. So, but again, if you guys have any questions, just feel free to unmute yourself or type in the chat if you like the question. So, my first topic is why in the world would we do this? So, a couple of interesting reasons why trading options on futures is probably worth a look. And I think, the more I do it, the more I like it. One is lower buying power requirements. And we'll talk about that later. But if you did just a regular credit spread using SPX versus the ES, your trading system, your broker platform will have a certain amount of buying power that they're going to tie up when you put this trade on. And you'll see, and I'll show you in a little bit, how much less it is when you do the futures versus an ETF. It has preferential tax treatment. I'm not a tax guy, but it has, that 60-40 treatment on even, short-term trades. The other thing that's interesting is that, it has almost around the clock trading. So if you put a trade on, today and at 9 o'clock, you want to get out of the trade for whatever reason, you can exit the trade at 8 o'clock, pretty much anywhere from 6 o'clock in the morning or in the afternoon, all the way through the day. So there's like a short period of time between 4 and 6 that the futures market is closed, and it's closed on the weekend. But other than that, it's open and trading. So you can see how the futures are moving, and you can trade them anytime you want. So if you're working full time and you like trading the futures is an option for you. And the other thing that I'm liking more and more is you have the ability to trade something other than equities. I mean, you can trade, oil and gas, gold and silver in ETFs, but this gives you lots of extra choices. And I'll show you kind of how crazy the amount of choices are. And then also, if are new to trading futures, they now have micro options, which are 1/10 the size of the mini options. So it's a great training tool. So if you're starting out or have a small account, you can trade the micro futures for 1/10 the cost of trading the ES or any other futures. So, and there's no pattern day trading rules. Not that we are trading zero, day trades, but there's no requirement. You don't have to have 25,000 in your account or anything like that. So, so that's kind of why I thought it would be interesting to at least, touch the surface of trading options on futures. And you do need to be approved by your broker to trade futures. So, and it's not a difficult process. And it's just something you have to do. So, anyway, so any questions so far? Okay, so so the question is, well, what can we trade? So the main categories are indexes, commodities, energies, grains, livestock, metals, and soft. So currencies would be anything like any of the euro dollar, the US dollar, any of those kind of trades. And then the commodities would be, gold and things like that. Energies would be, oil, natural gas, crude oil, ethanol, things like that. The grains would be, trading corn, wheat, soybeans, all that kind of stuff. Um, the metals would be, gold, silver, copper, that kind of thing. And then you have, indexes, of course, is probably the one that most people trade is, trading the S&P index, the NASDAQ, the Dow, things like that. So, lots and lots of choices. The softs are things like cotton and sugar, orange juice. So tons of choices that you have to trade. And one thing that I would probably say is that you probably want to trade what you know. So I wouldn't recommend, going and starting out trading soybeans or anything crazy like that. But there's lots of choices. I guess that's my point. Um, so anyway, that's what you can trade during options. And I wanted to give you guys just an overview of the buying power requirements of trading, you know, a naked put on SPX versus the ES. So I went in today and just wrote down just a random trade, not a recommendation at all. So I just went and looked at a 15 delta naked put using 45 days out. And so if you went out and you sold uh, a 719 5100 naked put on the ES, it would pay a credit of $2,075.
My dick's so big it could double as a goddamn backhoe.
Okay.
No words.
I just kicked them out. So sorry about that. So anyway, so if you go and sell a July 19th 5100 put in the ES, the credit would be $2,075 and the buying power reduction would be $7,629. That's in an IRA account. In a margin account, I'm sorry, in a margin account, it'd be $7,600. In an IRA or a non-margin account, it'd be $15,000. So that's for trading the ES. And that's a naked put 15 delta. The same strike in the SPX would pay a $2,400 credit. The buying power in a margin would be 86,000. And in a non-margin account, it'd be 507,000. So huge difference in the buying power. So in a non-margin account, you basically can trade the same strike for 15,000 versus a margin of 507,000. So that's why I, got my attention in terms of the ability to generate, a higher return on your capital that way. Does that make sense?
Yes.
So that's kind of one of the main reasons that yeah, I think taking a look at options versus ETFs or individual stocks makes sense. So so in terms of what you can trade in options, You can do credit spreads. You can do naked puts and naked calls. You can do strangles. A lot of people do that. It's just an iron condor without the legs. You could add the legs if you wanted to. You can do debit spreads. You can actually do covered calls where you actually buy um, the ES. I guess it'd be more like a diagonal, but you can sell calls against it. And you can do what I titled like exotic trades where you're like a 1-1-2 or very ratio trade, lots of different options trading the future. Um, that's pretty much anything you would be trading an ETF, you could trade um, using the futures. So I think, so lots of choices, lots of strategies. So um, I wanted to share with you my a trade that I've been running a while, and I put this trade on every week. So pretty much every Wednesday I put this trade on, and it's pretty simple. I go in and I look at the option chain for the ES, and I go out around 70 days. So if it's 72, 68, whichever's the closest strike to that 70 days. And then I look and I sell a 5 delta put. And then what I'll do is buy a put 200 points lower. And you could do this any combination. You could do it 100 wide. You could do it 50 wide. You could do it as a naked put, whichever you want to do. But I liked the concept of having make it a defined risk trade. So it kind of it reduces the buying power a little bit, and it's a defined risk trade. So if anything crazy happened, at least it's a defined risk trade. So, and I'll show you my trades as we go through them. But so my strategy is every week I put a new one on. And I spoke with Eric about this strategy, and he ran the back test on it. It's about a 90% win rate in overtime. So I like the probability of winning. The pop, according to Tasty Works, is about a 98% win rate. And my exit plan is, unless I get stopped out, I just let the trade expire. So I go for the full profit. I put it on, and I just watch and see if it gets close to the stop loss. Since I've started this trade, and I'll show you the results, haven't been stopped out or even really close to any major losses. So, and with this strategy, since I'm putting one trade on every week for 70 days, I'm going to have, once I'm fully loaded, I'll have 10 separate trades on at any one time. And then after that, the trade one will drop off as one starts. Does that make sense, everybody?
Yes.
Okay. So, and Rob added, you can use any brokerage, Thinkorswim, Tasty, and he noted that Toss was charging a lot, so he asked him to lower the fees. And
I don't hear you.
what do you mean you don't? So anyway, so if you put 10 separate trades on, then one would drop off at any one time. Okay. And so here is just an example of the trade. And so, ES was trading at 53.20. The 70-day trade I used 816, 72 days away. I sold the 4,700. I bought the 4,500, and the credit was $3.90 per contract. And one thing that's kind of different about options are they'll show you the credit, but it's actually they're only going to pay 1/2 of that. So for every contract, you get 390, you're only going to collect $195. The buying power reduction per contract was $2,100. And there'd be half of that, approximately half of that in a margin account. So if you look at the possible return on buying power, it's $190 divided by 2130, or about 8.9% return in 72 days, or 45% annualized. So and you could trade the 5 delta naked. You'd have higher credit, also have a higher buying power. So that is my setup trade. And so that is the trade. So what, the question is, what would the ROI be if the Ukraine war didn't happen? I don't know. I mean, I think the market hasn't, reacted, dramatically to that. So I don't know if it would have made that much of a difference. And and Amanda asked, why only collect half on the trade? I don't know the answer to that, other than, and I'll show you on the option chain how that works. But if you know, that you're going to collect 190.
I don't agree with Alex.
So, that's what it is, $195. I'll show you on the option chain. So, so anyway, if everybody can just keep muted, that would be great. And I will try my best to, if I find out who is just, wants to be uncooperative, then I'll just boot them out like the other guy. So, anyway, and again, I apologize. I can't do any more than just, find out who's doing this silly stuff. But anyway, any questions? Okay. So, okay. So, so here is my actual track record since I started doing this strategy. I will tell you, I first started trading just the naked put, selling the 5 delta. So you can see, started back in February, and it shows, what the credit was, which it's a lot higher, right? If you're only selling the naked put. The buying power is about double. And so on these, I was actually closing them early. So I put this one on, I closed it in 42 days, made a 6% return, 52% annualized rate of return. So, higher credit, higher profit, exited earlier, have a higher risk because you have a naked put. So I kind of evolved into trading these more as a spread. So starting in March, I went to the 200 spread, and I listed, and I started trading, 1 or 2 contracts, and I've increased the number as I've gone along. So all of these trades have, that have expired for a full profit. The last 2 that expired at the end of May were about an 8.6, 7.3 rate of return in that approximately 70 days. So the annualized rate of return is pretty good, especially for, a pretty low risk trade. So that's why I kind of add them every week. And so, if in this particular example, I added, 4 at $3.50, then I would collect 700 at the end of, when this one expired. So any questions about that? Let's see. George asked, isn't the spread basically the same if you did the SPY? I think what you'll find is you don't get the same amount of credit for the difference. And like Rob had put in, you don't get the same tax treatment. But you could do there's nothing wrong with doing a 5 delta on the SPY. Same concept. It's just, I think what you're going to find is the buying power between the two, and we can look when we get through the slides and see what it looks like on the option chain. So that is the actual, my actual results. I didn't put in today's trade, but I entered one for the week. So those are the results. Any questions about the mechanics or anything like that? Okay, so George added that, SPX is also 24 hours, and yeah, so same thing. I think, and what you'll find, just like that previous slide, is if you do the same exact trade on the SPX versus ES, you'll get about the same amount of credit, but the buying power that you tie up for the trade is much less. So that's the reason I've kind of wanted to at least introduce everybody to futures, trading options on the futures. So in summary, it's a great alternative to for option traders. I traded options for a really long time and really never was exposed to, the mechanics of trading options on the futures. So you can, I've looked at, trading futures, trading the SPX, but now this is just another tool that you can look at. And it's the same basic trade as if we were going to do stocks, ETF, indexes. Of course, the ES, they're not subject to earnings announcements like an individual stock. I think the biggest two things, though, are, the lower buying power requirements, which really equals a higher rate of return on your trading capital, and almost round the clock trading. So that's kind of the summary of, and then again, I just wanted to put in there that you want to trade what you know. So if you don't know, the sauce like cotton or it's all those odd things, I would just stick to the instruments that you do know. That'd be my advice to all of us. So anyway, so that is the my presentation, the PowerPoint on this. So any questions before I'd like to show you the how it looks on an option chain, if that's okay with everybody. So if you have a question, just let me know. I'll be happy to try to answer it. And then, okay. What do y'all think? Do y'all like this idea or not like it? I guess that's one thing. Okay, good.
Yes, that seems to simplify things.
Yeah, I think it's a pretty and I know Rob's already doing it. So, I've become a big fan. I like the really high rate of return on a low risk trade, like Amanda said. So anyway, so let me go out and I'm going to stop my share for just a second. And then I want to show you the option chain where we can take a look at that. I'm just going to go over here and share my screen here. So, and I know sometimes it's hard to read, but we'll do the best we can. So this is the ES. And of course, it has pretty much every day option. So I don't recommend doing day. I haven't tried day trading on the futures, but my trade is I like to just go out and look at what's the expiration that's as close to 70 days as possible. And then I want to look at the my option chain. So I'll go down and I will look at a I think this is the trade I actually put on today. 4,700, 4,500 was my so this one right now would pay $3.20. And remember I said how it's 1/2 of the payout. So the maximum profit, even though it shows 320, it's actually 160. So, and I'm not really sure why. The buying power for this particular one, they're showing as $1,000. Now, of course, this is not during the main part of the market. So it could change after the it could change, once the market opened. But if you took the $160 max profit divided by 1,015, that would be like a 15% return. I think that's high. I think that number should be about double that. Oh, I'm sorry. This is actually in a margin account. So that's what it would cost, tie up in a margin account would be 1,500. So that would be, something like a 15% return. In a cash account, like an IRA, it would be the buying power reduction would be twice that. So so that is kind of the basics. So and so if you did a number of contracts, you can know what your buying power is and what your rate of return would be. So that is the trade. If you look over here, you can see all of your different symbols, like the NASDAQ or the Dow. You can also go in here and do the micro. So if you didn't want to do the ES, you could actually go in here and select the micro, which it doesn't offer as many strikes, like the other one, but you can find, like, you can get the same strike, the same date for the 70-day trade. And you could go in here and you would sell the same trade, 4,700, 4,500, and it comes up 330, but this one's only going to pay 1/10 of what the ES. So it's only going to be $16.50, but it only ties up $100. So if you were just testing out a strategy that you wanted to use on the ES, but you didn't want to risk, a lot of money, you can trade the MES, which is the micro. And there's pretty much a micro for every option. So you could trade the micro oil, you could trade, gold, anything that you wanted to trade using options, you could trade the micro. So so it's a great place to test out stuff. So if you said, hey, I want to follow that trade that that Brian just talked about, and you don't want to like put a big amount in, you could trade a micro for 10 weeks. So anyway, so that is what I have for tonight. So any other questions? Okay. I hope this has been helpful. And apologize for all the interruptions. But again, this has been recorded. If you guys have any questions, just reach out. I'll be happy to answer any questions that you guys may have. So, and if you guys have any suggestions for upcoming meetings, I'd love to hear from you. And so that would be So Amanda asked, was anybody trading NVIDIA today? And Tobias said, never buying NVIDIA again. So Hi, Alex. So I found out who did it. Okay, again, I apologize. I don't know why idiots just want to waste their time doing stuff like this. But anyway, I hope everybody enjoyed this. If you have any questions, just reach out to me and we'll see you next time. Thanks, everybody.
Thank you, Brian.
Thanks, Bud.
Thank you, Brian.
Uh-huh.
Yeah, thank you a lot, Brian.
Oh,
I really appreciate it.
okay, y'all take care.
Thanks a lot, Brian. You take it easy too.
Bye.